Hey everyone, welcome to the KE Report Daily Editorial. Coming at you Monday, June 23rd, chatting with our good friend Craig Hemke. Craig is the founder and editor of tfmetalsreport.com. I'll post a link to his website in the show notes. Now, Craig, we usually bring you on every week for a recap in the precious metals space, and we will get to some of the precious metals moves, but there's a lot of geopolitics driving markets right now. One could say that is the main driver and has been for a while. The geopolitics was initially coming out of the US and some of the tariff trade wars that we were seeing. And now we're seeing escalating wars in the Middle East. Over the weekend, the US launched some missiles into Iran. And so now we're seeing what the follow through is. It just seems like a very weird day market wise today when the US enters a war, launches missiles into Iran. You would think that the oil price would skyrocket higher, and the oil price is actually crashing today. That being said, it did really move over the last week when this war picked up some steam. Just seems like a counterintuitive move from oil, but maybe oil's saying that nothing's going to happen. There isn't going to be massive escalation on the back of the U.S. launch, but hey, Iran's also saying that they attacked a U.S. military base in Qatar. So Craig, makes sense of what's going on today in the market saying that they don't think this is going to go much further.
Maybe that's why these things always seem to happen on the weekend, Corey. If the markets had been open Saturday night when all this news first hit about the B-2 bombers and the bunker buster bombs and all that kind of stuff, the reaction would have been different in the immediacy of the event. But now, with time, things have really kind of sorted themselves out in the other direction. I had crude oil you mentioned last night, not the Brent, but the West Texas Intermediate WTI got up to $77 a barrel, just as futures resumed trading at 6 o'clock Eastern. Well, now it's down to 69. I mean, it was up 5%, now it's down 6%. And I think the thinking as we record this is that this whole event is about to go the way of the Israeli-Iranian event of late 2024, where I was being really nervous at that time because Israel was shooting missiles into Iran and Iran was shooting back at Israel, and you didn't know what was going to happen next. And then finally, it just kind of got to a spot where they said, "No, we're good." And both sides tried to kind of claim a face-saving attack, and we really taught them a lesson. And then it all just went away. And now that's all of a sudden, as we record this, that's what seemingly is happening here. Yeah, the U.S. entered into this thing Saturday night. The Iranians, in a very telegraphed move, about as we record this an hour and a half ago, fired some missiles at the U.S. big, huge CENTCOM base in Qatar. 3 decades of this. I still don't know how to pronounce that. Anyway, they fired them in. U.S. and Patriot missile batteries shot them all down. The Iranians put out a statement saying, "Okay, there you go. We fired 6 missiles at them because that's how many bombs they dropped on us. We're good." In normal circumstances, kind of like last fall, you might say, "Okay, that's it." And if that is the case, that's why oil is plunging. That's why the dollar is going down. It's losing that safe haven trade of last week. But this is not normal circumstances because who knows what Trump's going to do? He may take this as his opportunity to kind of press his advantage. He had no idea what his response is going to be next. Hopefully, it's the off ramp. So we'll see. As it impacts the precious metals, we had some pressure on gold and silver in the miners last week, mainly just because of this safe haven rally in the dollar index. And that was, leading to algorithmic selling in metals and the mining shares. Well, now if we lose that safe haven bid, and the dollar index has reversed today as well, and it starts giving away, making new lows below 98 as we go through this week, metals are going to be bid. The mining shares are too. So all of this does connect back to our main focus, and that's why everybody wants to keep paying attention.
Yeah, Craig, it wasn't much of a dollar rally last week, but to your point, it got the algos going where they were pressuring gold and silver last week. But right now, as we speak, the dollar is hanging out right at 98. It's like 98.02. So it's at that precipice of potentially breaking lower Now, we hear all the time that there's an inverse relationship to the dollar, but really it's more of a tailwind or a headwind factor. If the dollar does break down into the 97, 96 zone, do you think that's enough to keep boosting the gold and silver price, or is there something else you're looking at beyond geopolitics, beyond the dollar, that would keep ratcheting gold prices higher?
Well, that would do it. I've kind of felt that we were sitting on a summer rally in the precious metals. And, since the 1st of June, it has kind of been playing out that way these last couple of weeks. But it's that bounce in the dollar that kind of derailed it a little bit over the last, I don't know, week to 10 days. If the dollar does break down further here, and when in measuring by the dollar index, if 98 gives way, it looks like the next support might be 96. That's how it plays out, then that, again, not directly one-to-one correlation, but that should boost the precious metals. And the last time when gold got to 3,500 or whatever it was, the very first time back on April the 22nd, that was the exact same day the dollar bottomed out at 98. Well, then the dollar came down to 98 again a couple weeks ago, but gold was only 34.05 or 34.20 or whatever it was. Now here we are, 98 again, and we're at about 3,400. So, if the dollar index were to fall to 96, why wouldn't gold rally to 35, 35.50 again? And you can certainly see another leg higher in silver too. So that'll be kind of the key as to whether, again, we keep that tailwind for a little bit of a summer rally. And then, there's obviously other things behind safe haven demand that are going to drive that. This prospect of future easing, and everybody else, all the other central banks around the world are cutting rates, but the Fed hasn't really started yet, at least not here this year. That prospect is out there too, which, again, would further weaken the dollar and further help the metals as we get into the summer.
See, Craig, I find it so hard right now to trade these markets because geopolitics, war, that's hard to predict. And then even before that, as I said, it was these trade wars that were ongoing. That was very hard to time because we never knew when Trump would ramp up the trade wars and when he would pull back on them. But then, as you said, we also have some of these, what are usually drivers for the market, central bank policy, like the Fed, which we heard from last week. And I haven't seen a Fed this divided. When you look at the dot plot, 7 officials say no rate hikes, 7 say 2 rate hikes, and then there's a couple other people at 1 and 3. But the Fed even seems divided. So is that why we're seeing, I guess, this indecision in terms of markets, where markets have done pretty well, but so have the safe havens outside of the dollar? We just don't know where the next catalyst is coming from because there are so many out there right now. Again, we have the tariffs potentially coming back online in a matter of a couple weeks, and the Fed doesn't seem like they're going to be cutting rates. How do we take longer term bets in this sort of an environment, Craig? Or do we just not?
Didn't I just, yeah, you listed all off. And actually, in Corey, you said rate hikes a couple times, which is, I've made that mistake before too, because we've kind of flip-flopped back and forth in Fed policy the last couple of years. Yeah, the dot plot and the summary of economic projections from the FOMC last week was very divided as to whether there should be no cuts this year, 1 cut, 2 cuts, 1 cut next year, 2 cuts next year. Nobody really seems to know what to do. One thing outside of all this that we should keep track of this week is semi-annually here in the U.S., the head of the Fed has to go up on to Congress and testify, if you will, in front of the House, the House Financial Services Committee and the Senate Banking Committee. Well, guess what? That starts this week. So Tuesday, the 24th, 10 o'clock Eastern, you'll get Jerry Powell and a string of headlines. He'll even have, I'm sure, a opening statement that'll be released at about, a few minutes before he sits down and takes the mic. So that's going to, it'll be interesting to see what he says and how he says it in contrast to what he said and how he said it last week, and see if there's any hints as to where they might be headed from here. Like I said, it's almost as if a few of these folks are starting to kind of vie for Powell's job. Goonwaller, I always call these guys goons, last week was out saying, you know what? Maybe we should cut rates. He's like raising his hand going, hi, President Trump, if you get rid of Powell, I'll take the job. So it'll be interesting to see, like I said, if we get any hints, further hints of what Powell at least is thinking over these next couple of days when he is testifying, oh, use that word with like air quotes, before Congress on his annual Humphrey Hawkins stuff.
Well, Craig, if we take all the geopolitics and the macroeconomic noise and just put it on a shelf for a second, I think it's also worth pointing out that we're getting really close to the end of the month and the end of the quarter. And when you think about where precious metals are priced, both gold and silver, it should be a pretty nice quarterly close here, and it should be a pretty nice monthly close. What does that mean for future price action on the technical side? And then what does that mean for Q2 earnings for these mining companies?
Oh, brother, I'm glad you brought this up, Shad. I was writing about this weekend. They on the silver chart. This is the one you're going to want to watch because silver is going to be really busy these next couple of days. In fact, right now, with the July silver going off the board and into its delivery period on Friday, the July silver, I'm looking at it right now, is about 7 cents in backwardation versus spot, meaning there is so much selling going on. Liquidating your July and rolling it out to September or December or whatever. There's so much selling going on in the paper contract that it's actually trading at a backwardation versus spot. So again, not unusual as we head into the contract going off the board. But here it is, staring you in the face. There's a lot going on in silver this week. Options expiration for that July silver contract, but also there'll be gold options that are going to expire on Wednesday at the COMEX close as well. So there's all kinds of interesting stuff going on as we approach now the end of the month and the end of the quarter. Silver being so volatile over the years. You can look at a chart and find higher monthly closes so I think the highest all-time monthly close is like 48 or something back at the end of April 2011. But the highest quarterly close is only like 37.65 or 37.53, something like that. Now, I don't know if we'll get there by next Monday. I mean, that'd take a pretty good rally from here. However, by the time we print the monthly chart, if we do happen to close kind of where we are now, 36.50, it's going to have a very bullish look to it. And like I said, even though maybe you don't have the highest quarterly close yet of all time, that quarterly chart's going to look pretty good too. So we're entering a very important time for the silver price, something everybody should be watching over the next week. And I'll kind of tie that back to the dollar. If we can get this dollar weakness, that's going to make it more likely the price is going to hang in there over the next 5 days as we wait to paint those charts.
Craig, what are your thoughts on the action we've already seen in the shares over the last few weeks? We saw money really filter down into the silver stocks, into the juniors, into some of the lower quality stocks, quite frankly, and we saw some of the leaders slow down some of their momentum. I've noticed a bit of a shift there where now we have seen a bit of a slowdown just last week in some of the juniors, and some of the better stocks I think are starting to do better. But even looking at a company, I know you like to follow Newmont, you love talking about them, but just this year, Newmont is up almost 50%. So that has actually done pretty well this year as well. So what are you seeing in the whole environment of the gold and silver equities right now?
Well, again, with Newmont and Barrick, yes, they're up. Not nearly as much as what I would consider to be better run companies that are out there. But yeah, that one's up. They're up as well, kind of rising tide lifting all boats. It was an interesting week last week. You could sense earlier this month, people that bailed out on the mining shares after the most recent round of quarterly earnings were announced. And they said, well, just wait till the next one. We'll see what the price does. You could sense those people coming back in. Until last week, the GDX last week was down like 4%. And it's like, whoa, wait a second. Are you thinking price is going to go back down? And I mean, are you already discounting third quarter earnings? I don't know. So now but again, last week was also New York Stock Exchange option expiration week. And so I don't know how much that factored into the price action that you saw in the shares and the ETFs. So now today, here we are, first, I guess, day after all of that, on Monday the 23rd, and money's rushing right back into the shares. A lot of the ones that were down last week are right back up. GDX back up a couple percent today. I would suspect from now into, what do you guys that know the calendar better than I do, latter part of July, when we start getting that kind of the first round of second quarter earnings reports, I would think generally the trend is going to be higher. People buying the dips, that sort of thing, kind of getting positioned ahead of what should be a Another just tremendous run of, just these companies just printing cash. So I would suspect the trend's going to be good for the next 4 or 5 weeks. Maybe not, up every single day, obviously, or up every single week. But I think by the time we get to that next round of earnings reports, I would suspect most of these share prices and ETFs are going to be higher than they are today.
Well, Craig, just to that point, I was going to dive in with you here a little bit even further on these Q2 earnings. Like when you think about where the metals price, the average price for the quarter has been, it's substantially higher in both gold and in silver compared to what it was. Do you think the market has properly factored that in? Like, it's a forward-looking market. We hear that all the time, but is there the potential for some upside surprises on these quarterly reports from Q2? Because it doesn't look to me like the market has really factored in where silver price has been or where gold price has been for the quarter.
Right. I mean, and again, that's all kind of part of the larger picture of the frustration, right? I mean, we could this, go back to what we were just talking about, a year and a half ago or almost 2 years ago, when gold was struggling to get above 2000, and we'd think, if we'd say, gosh, we just go forward a year and a half and gold's at 3,400, think of where these share prices will be. And yeah, there are a lot of them are up, some doubled or tripled, but we'd still be like, how in the world have these not gone up even further with how much money they're making? There's one part of that crude oil story that maybe was impacting things last week in the pullback in the shares, as if when the concern was that crude was going to go to 100 or something, and that energy prices being such a big component of the cost of the mining companies, that maybe that was all part of what was helping to push the mining shares back, thinking, wow, energy prices are going to soar in the back half of this year, and that's really going to cut into margins. I guess you could kind of, maybe there was some people trying to make that argument, but now today with crude oil going back down, you remove that risk. Gold goes up and silver goes up, and now the shares look even juicier. I don't know. Where we go from here is still obviously a function of what the metals are doing, but it also just augurs for just the same thing we've discussed really since the first part of this year, late last year. And Corey, you mentioned Newmont, and I always talk, look, you make great cash if you do some homework. Just blindly buying the ETF that is heavily weighted in some of these underperforming, relative to the rest stocks, you're going to do okay, but you can do better if you actually do some homework. The silge would be another example of that. Yeah, I was just writing about that last week, how the silge is having a heck of a time breaking out on the weekly chart above 15, the SILJ, the junior silver miners. It's been fighting that level for 4 years, and 4 years ago, silver was trading 60% lower. So, but there are some that have done perfectly fine. So I guess ultimately, in my rambling long answer to your nice, basic, easy question, Shad, I think there's still great fiat money-making potential in the mining shares, but I really encourage everybody to do their homework, listen to what the great content the two of you put out every day, and try to zero in on the ones that manage their expenses well, manage their costs well, have the widest margins they can possibly make, and I think if you can do that homework and find those companies, you'll be positioned to do even better than you would be if you just kind of blindly bought the sector.
So to that point, Craig, is it all about costs? Should we just be doing our homework and looking at who has the lowest either cash costs, all-in sustaining costs, and simply buy those? Or is there another characteristic that you like to look at that you think shows best in class or just a higher level company?
Well, in terms of producers, there's always all the other stuff, right? Management team and the jurisdiction they're in, and there's all these other things you got to factor in. But at the end of the day, the quants are always just going to look at, what are your margins? And so, yes, I think the most important number one factor to consider is their input costs. Yeah. And again, which explains, that's why you can get a thing like that silge, that even though the price of silver is up 60% in the last 4 years from 22 to, 36, the silge is still just basically where it was 4 years ago, trying to get through 15. And again, that's a function of, the price goes up, but if your costs have gone up by 60% at the same time, you're making the same amount of money. And which then means you kind of, you got to factor in all these other things that go with it. But in a sense, you could say that's why the share price is the same. So yes, number one, that's the first data point I would look at. And anybody can do this research. You can go on X and search this. people have put out some beautiful charts as to what the lowest cost, highest margin, most efficient mining companies are. And those are the ones, not coincidentally, that have had the best years over the last 12 months or the last 6 months. Those are the ones that are performing the best too. So anyway, that's where I would start.
All right. Hey, Craig, thanks for sharing your insights in what is, again, just kind of chaotic markets right now. Everyone trying to figure out what's going on in the Middle East, what's coming with tariffs, if the Fed is going to be cutting rates anytime soon, and really also what Trump could tweet about, send out to his followers. So who knows what's coming in terms of next market moves. But right now, I don't know. It's a weird market. It almost seems like there's this sense of calm with all these almost black swan events that are impossible to predict on the horizon. So, hey, we'll follow up with you next week. And again, if you want to follow along with what Craig is writing, click that link in the show notes or simply type in tfmetals.report.com. Craig, thanks as always for your time, man. Have a great week.
All right, guys. Thank you.